This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thank God it's Friday. It's a nice, lovely Mumbai morning here this Friday. We're coming to you live from the CNBC TV18 Motilal Oswal studios. Will the market weather be as obliging is the question, because yesterday it was not. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. And in weather parlance, right, we're running into rough weather, a little bit on the upside, right? But be that as it may, it's Friday, it's the end of the week. Lots of cues to watch out for. Global cues are stable, a lot of result reactions as well. We have a long day ahead of us.
Well, that's right, guys. And I'm going to have a really, really good weekend. I complete 13 years here at CNBC TV18.
Oh, wow.
It's been a fantastic journey. I thank everyone, who's supported me along the journey. Thank you guys as well. Every morning we wake up to each other. So that's good. And, you have the bulls and the bears. So all the bulls have been positive. Thank you so much. And the bears, you'll have quietly been covering your shorts. I hope there's more short covering in store. But it's been a fantastic journey. So I'm quite excited.
And congratulations, by the way. It's been so amazing, right? I mean, to see your growth till here and to work with you side by side, it's been the best. And to many, many, many more.
Yeah, that's what someone told me 13 years ago that, Nigel, you're going to be doing Bazaar 13 years later and you're going to be getting a chance to be, with CNBC TV18 for so long. I would give everything for it. So I'm so happy that these 13 years have passed. I couldn't ask for more.
Here's to many more, Nigel. Congratulations.
Thank you.
Well, let's just quickly take a look at what the setup this morning looks like, because yesterday, as I said, was a little off and off color. Deep red, actually, I think is the right description. And that all of that happened after the RBI policy. So that RBI policy turned out to be pivotal. Let's just begin with what you need to know as we begin this new session. There was a sharp sell-off, and the Nifty ended 200 plus points lower on the index, and quite a bit, right? Now, the realization which I think the market got was that the RBI hinting that perhaps there are no rate cuts coming in FY25 until and unless they get to that 4% inflation target. I think so. It was a hawkish hold. You can say, well, there was nothing outwardly hawkish in the policy. There was not, but I think the governor's comments were very clear. They're not in a hurry to cut rates. And I just want to sort of look at what happened overnight as well, because something similar is happening in the US as well. So, for example, as we've been pointing out, many Fed officials have been coming out and saying that there is no hurry to cut. And last night we had one more. This is, Thomas Barkin. He's the regional Fed president. He said that jobs data has been remarkable, and the Fed shouldn't rush on rate cuts. That's the exact quote which came through, right? So that realization that maybe, we are kind of looking at the markets have got it wrong. Maybe we've got it wrong by saying that inflation is just imminently coming off sharply and that rate cuts are just around the corner. I think that's happening in the US, and I think that happened here in India as well. The 10-year, it responded, but not in a significant way. 3 basis points higher, 4.15% is where the 10-year finally ended. The dollar is at about 104, nothing remarkable there. US equities, well, they consolidated at highs. The S&P, for example, just about 0.06% higher. The Nasdaq was up about 0.25%, but these are record highs for the US market. So, and we are kind of consolidating and holding on there. Oil prices moved up sharply, and this is something that we need to watch. We are now 81 plus actually, $81.5 a barrel. That's a 3% jump. So for a single day, that's large. Now, just to come back and circle back to the levels here, right? The Nifty has closed just under the 20-day moving average at 21,000, just over the 21,691 mark, which is the 20-day moving average. Now, we'll need to see if this holds. The market in January as well started correcting once that 20-day went, and we got a pullback, a short-lived 2-week pullback, and we're right around there once again. And I think that's going to be the decider in that sense. The next level on the downside is the 40-day exponential moving average, which is a little lower at about 21,432 or so. Remember, if you look at the futures and options data, it does show that now FIIs are their short positions, net short positions, and index contracts are the highest it's been, over the last 5 or 6 days at least. We are back at 90,000 plus, 92 or almost 93,000 contracts short. 4 or 5 days back, this number was 92, 93. The day before, it was 80,000 contracts. So there's a significant jump that we've seen. So again, something to kind of watch out for. At an extreme, 120, 130, that starts to indicate that maybe we are close to a bit of a bottom. We're not there yet. It's just increased right now. Now, Bank Nifty, and this is something we've maintained for a while, that it perhaps looks like it's looked weak, and it can retest the low of 21,449. And that's something we'll watch out for. On the way up, the 20-day perhaps will act as a resistance, which is 46,062 at this point. We've had a phenomenal rally, and some pullbacks along the way are par for the course. Will we get that? Will the market pick up pace? Because so far there has been no follow-through. It's been one-day wonders. The market sells off day two, nothing on the downside, no follow-through. Similarly on the way up, and that's why it's been so ranged. This morning, the SGX Nifty, the GIFT Nifty is indicating a 45-point lower start. Sonia.
Oh, absolutely. And the range is well defined, right? As you said, the resistance level is somewhere around the 22,000 mark. And on the downside, the most important level to watch is the 20-day moving average, which is that 21,690 mark. So between 21,700 and 22,100, the market is sort of stuck within that particular range. But global cues are stable. So as we wake up this morning, we saw the US markets were not bad. In fact, the S&P 500 touched that milestone 5,000 mark, which has been quite remarkable. In our own markets, I'm watching out for a couple of things. One is, of course, the move on SBI, right? That stock is up 8% this week. We've seen large delivery-based buying in SBI. Yesterday, there was delivery buying of over 2,200 crores in just one trading session. And also, ICICI Lombard bought 0.4% stake in SBI yesterday. So, this is one space and one stock that will continue to be on our radar. Apart from that, we had strong earnings from the likes of LIC. There was Zomato, where there are multiple upgrades that have come in. In LIC, the value of new business has gone up 46%. In Zomato, I reckon that could continue to see traction this morning, given the kind of strong numbers and brokerages raising their earnings estimates on Zomato. So keep an eye out on that. Lots of results today. There's Hero MotoCorp, there's Tata Power, there's Bandhan Bank. And in fact, Tata Power is the one I'll watch very closely, given the kind of run-up that this stock has seen and the thrust that government has on renewable energy, right? So Tata Power will be in focus. There's also an IPO that opens today, Entero Health. Now, I don't know the kind of demand that this would get, because there are some, problem pockets here. It's a loss-making business. In fact, in FY23, this company reported a loss of 15 crores. So let's see how it goes. But lots of action to track. And I think the market as well could be in a good mood, given that it's Friday. And Friday is always a great mood to begin with. But no, jokes apart, this range that we've seen, 21,690 on the downside and 22,100 on the upside, is something that the market will have to deal with for a while.
Well, that's right. We are in good mood. So hopefully the markets as well are in pretty good mood on a Friday. But yesterday, well, it was a little bit disappointing, because you had a couple of factors that did play out with regard to the Nifty itself. And the reasons that we ended lower, one was the commentary that came in from the RBI was a little bit more hawkish than what the street anticipated. There were the heavyweights in there. ICICI Bank, HDFC Bank and ITC, all of them were under pressure, and they accounted for more than 50% of the losses yesterday. And the Nifty weekly expiry, well, it played out to the bears. Remember the previous two expiries, whether you're looking at the Nifty Bank or the Nifty Financial Services weekly expiry, they played out for the bulls. But yesterday, that wasn't to be the case. What did the FIs do? Well, they added close to around 11,000 short contracts. And that's what takes the short positioning to around 92,000 short contracts on. Just a few sessions ago, it had gone to around 60,000 short contracts. And from them, we've quickly seen it go back to around that 93,000 odd mark. As we've been saying, when it goes to around 100,000 odd, that's where you see a larger short covering bounce that's playing out. So don't get worried. The FIs have done this before. When they keep adding, short positions and they go overboard on that side, that's not such a bad omen for us. Getting to the levels that we're tracking, I was looking at the options data as well. And the 21,500 mark, crucial level on the downside. And you have two key technical levels. Near term, 20 DMA, we managed to defend that yesterday. And otherwise, the 50 DMA comes in there. But I think 21,500, that's the crucial level, which is almost in the middle of both those two. Moving to the Nifty Bank, that's very, very close to the 200 DMA. We have seen in the last couple of weeks, it's gone to the 200 DMA, breached it intraday, but from there you've seen a bit of a bounce. So you don't want this level to get broken down decisively. So those are the levels on the key indices. Stocks I'm watching, Concord. If you look at the stock yesterday as well, in a weak market, Concord ended high with a gain of more than 2%. And in the last 1 month or so, the street seems to be sniffing something. They're getting quite optimistic out there. We had the numbers which are pretty okay. So that stock has been a relative outperformer, and it's backed with some data. So in an uptrending stock move yesterday, you did see open interest as well was up by close to around 8%. So there is some long build up out there. And delivery yesterday was relatively better. If you compare the delivery yesterday with the previous two sessions, well, it was relatively better at close to around 14 lakh shares on the NSE. So Concord is the stock that I'm looking at. And in terms of levels, I'll lay that out for you guys. Let's get the show started.
Oh, yes. In fact, on the equity side, we have commentary coming in from Chris Wood of Jefferies, who says that the budget has caused Mahesh Nandurkar to increase further his investment in L&T in the portfolio. He says greed and fear already has a 6% weighting in L&T in the India long-only portfolio and a 5% position in the Asia ex-Japan long-only portfolio. Meanwhile, he adds, it has been an ongoing feature of Modi's government that the fiscal deficits have been used mainly to finance infrastructure investments rather than transfer payments. Chris adds the other point about the budget is that the government, as regards the disinvestment privatization agenda, signaled that the focus will be on value creation in public sector companies. In his view, this is a reason for investors to pay more attention to a cheaper part of the Indian market, namely state-owned enterprises.
All right, we'll get you some money market views now. V. Lakshmanan of Federal Bank says that higher than anticipated U.S. jobs and hawkish Fed commentary took the dollar index to a 2-month high, fueled by a rise in U.S. yields. He says the USD INR traded relatively stable post the budget, and he expects the rupee to trade range-bound in a range of between 82.8 to 83.2 in the next few sessions.
Right, and on the bonds, Lakshmanan says the Indian government bond yields traded marginally higher after the MPC kept the repo rate and stance unchanged for the 6th straight meeting, as inflation remained above the RBI's 4% medium-term target and economic growth continued to be resilient. He says the market continues to trade with a positive bias on the back of FPI flows and lower gross borrowings target in the budget. He adds the coming sessions could see the 10-year benchmark bond yield trade in a range of 7 to 7.15%.
A lot of stocks to track for you in our special top 10 segment. We'll get to that in a bit. For the time being, we run you through the list. Grasim, LIC, United Breweries, Global Health, JK Lakshmi Cement, and Aarti Industries. All of them will be reacting to positive news flow. On the flip side, Biocon, Torrent Power, RVNL, and Ramco Cements will be reacting to negative news flow.
Okay, well, that's basically what's coming up here in just a bit.